Hi, my name is Jeff Fretz. Welcome to Axiory's news broadcast. Here's the latest high-impact market news for the week ending the 26th of April. UK avoided the so-called triple dip recession. More importantly, 0.3 QOQ growth in Q1 GDP was indeed stronger than expectations of 0.1%. The data lifted some pressure on the BOE for expanding the asset purchase program. The MPC has been split, with outgoing Governor King and two other members voted for expansion in prior meetings. BOE announced an expansion of its funding for a lending scheme to help small businesses. The program will now last until January 2015. Current BOE Governor King said that FLS revamp will give banks continued assurance against the risk that market funding rates increase, especially in light of continued uncertainty in the euro area, and will help to maintain easier funding conditions for banks into 2015, and thereby help to support credit conditions and the recovery. The greenback was weighed down by the extended rebound in gold, as well as weaker than expected GDP report. Economic data from U.S. saw Q1 GDP rose 2.5% annualized versus expectations of 3%, though that's notably lower than Q4's 0.4%. The price index dropped below expectation, and headlines durables dropped significantly more than expected in March. The disappointing data added to expectations that the Federal Reserve will continue its monetary easing program amid lingering concerns over the outlook for the U.S. economic recovery. A number of key important economic data will be released from the U.S. this week, including non-farm payrolls, and will be closely watched by the markets. At the BOJ meeting in April, policymakers left the monetary measures unchanged. The policy rate was maintained at virtually zero, and asset purchases stayed at annual pace of 60 to 70 trillion yen. The central bank, however, upgraded the economic outlook aggressively, with the economy expected to start picking up the middle of this year. While differentiated on the inflation outlook, policymakers were unanimous in voting to leave the quantitative and qualitative measures unchanged at the meeting. Now, the most important upcoming fundamental news for the week starting Monday, April 29th, selected for you according to market movement significance. In the week ahead, investors will be awaiting mainly the outcomes of policy meetings by the Federal Reserve and the ECB, as well as Friday's closely watched report on U.S. non-farm payrolls. Added to this week, Wednesday's ADP non-farm payrolls forecast and Friday's ISM and U.S. services will also be closely watched. Here are your major currency pairs. Up first, the euro. The euro edged high against the dollar on Friday after weaker than expected data on U.S. first quarter growth, but gains were capped amid concerns over a possible rate cut by the European Central Bank. But the euro remained under pressure as speculation over an interest rate cut by the ECB intensified following weak German economic data earlier in the week. Data on Wednesday showed that the IFO index of German business climate fell to a 4-month low. The data came one day after reports showed that Germany's manufacturing and service sectors contracted in April. Recent comments by the ECB officials have indicated that bank would consider cutting rates if economic data continued to deteriorate. And finally, the dollar-yen. The dollar was sharply lower against the yen on Friday after data showed from U.S., while the yen found support after the Bank of Japan left monetary policy on hold. The central bank also indicated that it may take longer than 2 years to achieve its 2% inflation target, fueling speculation that the bank may implement additional easing measures later this year. The dollar rallied to a 4-year lows against the yen earlier this month after the BOJ unveiled unprecedented monetary easing measures at its April 4th policy meeting, but failed to breach the key psychological 100 per yen level. Today's multi-trader strategy is IGS Fund, which is one of the average risk strategies. It made a 1.86% profit last week, and today we have chosen its monthly gains for the last 3 months. The strategy achieved these gains, and the performance is rising. February was the best month for this strategy, and it managed to stay profitable in the following months, too, gaining 1.63 and 1.28%. That's all for today. Tune in next week for more in-depth currency news that matters to you. Don't forget to check us out on Facebook and Twitter. Have a pip-filled day. Goodbye.